Welcome to the Riskwiser Zone, the podcast where we delve into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news, trends, and insights that impact your financial portfolio. As we begin this episode, let's take a look at the current state of the market. The Nifty has been experiencing some volatility lately, but technical analysts are advising investors to adopt a buy-on-dip strategy, suggesting that the market is poised for a potential rebound. However, it's essential to approach this with caution and consider the broader economic landscape. One of the key factors influencing the market right now is the low India VIX, which indicates a decrease in volatility. While this might seem like a positive sign, it's crucial to remember that low volatility can sometimes precede a significant market move. We'll be keeping a close eye on this and exploring its implications for investors. In other news, the Bank Nifty has been underperforming, and technical analysts are warning of potential further declines. This is something to watch closely, especially if you have exposure to banking stocks. On the other hand, some sectors like railways, metals, and auto are showing strength and could be worth considering for short-term investments. We've also seen some individual stocks making headlines, such as Ola, which has been struggling to regain its momentum after a significant pullback. While it might be tempting to average down, our advice would be to exercise caution and wait for clear signs of a turnaround before reconsidering investment in this stock. As we navigate the complex world of finance, it's essential to stay informed and up to date on the latest developments. We'll be discussing these topics in more depth throughout the episode, as well as exploring other key stories and trends that are shaping the market. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, where we dive into the world of finance and explore the latest developments that could impact your investments. Today, we're taking a closer look at two regional banks that have caught the attention of leading analysts, Valley National Bancorp and Fifth Third Bancorp. As we navigate the complex landscape of banking and financial services, it's essential to stay informed about the companies that are making waves in the industry. Valley National Bancorp, listed on NASDAQ under the ticker VLY, has been identified as a growth opportunity by top analysts. J.P. Morgan's Anthony Elian has maintained an overweight rating on the stock, raising the price target from $14 hour to $14.250, citing the bank's solid fundamentals and steady earnings momentum. Meanwhile, UBS analyst Nicholas Holoko has initiated coverage of Valley National Bancorp with a buy rating and a $15.00 price target, highlighting the company's potential to expand its net interest margin and deliver above-peer earnings growth. This positive outlook is certainly worth noting, especially for investors looking to diversify their portfolios with regional bank holdings. Another bank that's making headlines is Fifth Third Bancorp, listed on NASDAQ under the ticker FITB. Truist Securities analyst Brian Foran has maintained a buy rating on the stock, raising the price target to $55 from $50, reflecting confidence in the bank's earnings trajectory and capital return strategies. Similarly, Keefe, Bruyette & Woods analyst David Conrad has increased his price target to $53 from $50, citing Fifth Third Bancorp's resilient business mix and disciplined expense management. These analyst actions are certainly worth considering, especially in light of recent operational developments at FITB, including the reduction of its prime lending rate to 6.75%. As we always say on the Riskwiser Zone, it's essential to do your own research and consider multiple perspectives before making any investment decisions. While both Valley National Bancorp and Fifth Third Bancorp show promise as investments, it's crucial to weigh their potential against other opportunities in the market. As we've discussed before, certain AI stocks may offer greater upside potential and carry less downside risk. However, for those looking to invest in regional banks, these two companies are definitely worth keeping an eye on. Welcome back to the Riskwiser Zone. As we wrap up today's show, I want to dive into a topic that affects us all, regardless of our age or financial situation: retirement. A recent report has shed light on the growing concern that many Americans may struggle to achieve a comfortable retirement due to rising costs, limited access to employer-sponsored retirement plans, and inadequate savings. The numbers are striking, with 47% of workers lacking access to these plans and 55% reporting no dedicated retirement savings. This has led to a situation where nearly a quarter of Generation X respondents have abandoned their goal of retiring, while three-quarters of millennials and Gen Z worry about needing to come out of retirement. Inflation, which has remained stubbornly high at 2.7% for the past year, has only exacerbated the issue, particularly when it comes to housing and medical expenses. As a result, many older Americans are being forced back into the workforce, with some citing ageism and difficulty finding new employment as major concerns. However, experts stress that returning to work shouldn't be viewed as shameful. In fact, research shows that continuing to work in later years can have numerous benefits, including sustained cognitive function and improved mental health outcomes, provided workers have flexibility and can handle their jobs. To address this issue, politicians and advocates are calling for more robust support systems, including increased access to employment opportunities and financial resources. As Senator Kirsten Gillibrand noted, "A lot of our older adults need resources to survive, and so we want to make sure that the workforce is available to them, and they won't be discriminated against from being hired and working if they need to." As we consider the complexities of retirement and aging, it's essential to approach this topic with empathy and understanding. By acknowledging the challenges faced by older Americans and working towards creating a more supportive environment, we can help ensure that everyone has the opportunity to live comfortably in their later years. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.